creativity is narrowly defined. It's not Don Draper. Don Draper is yesteryear. That's the 19th and 20th century. We're talking about the 21st and 22nd. And the definition of creativity is far different. There are nerds who can be creative.
Hey, it's E.B. Moss, Head of Content Strategy for MediaVillage, which is the home of the Knowledge Exchange. MediaVillage connects professionals in a collaborative knowledge marketplace of media, marketing, and advertising. Now, every once in a while, you come across someone who's a little bit larger than life in this industry, and that's exactly who I came across for episode 43 of Insider Insights. I spoke to Sir Martin, otherwise known as Sir Martin Sorrell, and he had a lot to say about where we're headed in the world of advertising. To say that he is bullish on digital and digital meets creative would be an understatement, but you're going to really appreciate a lot of his statements, so I'll leave it to him to share his POV. Hey, it's E.B. Moss, and I am beside myself that I am sitting beside Sir Martin Sorrell.
You certainly should be beside yourself.
I resemble that.
I am beside you, so you're not exaggerating.
He's now executive chairman of S4. Sir Martin, I might be shaking a little bit, but
S4 Capital, you shouldn't shake.
S4 Capital.
We're only just starting.
See, I'm already wrong. Can't believe it. All right, I'll get better from here on.
Research has to improve. That's what David Ogilvy started in. So. Gallup.
Well, you're going to also correct me if I get your bio wrong, but I'm going to take a stab at it.
Keep going. We'll try and correct you if you're wrong.
For those who are under a rock and don't know, right?
Okay.
You built the world's largest advertising and marketing services holding company.
Yeah.
And since I'm speaking on behalf of MediaVillage, and we're focused, of course, on that world, you literally defined the modern media agency business from the right people.
Some people don't think so. My mother thought so, but
really?
Nobody. Yes, that's right.
Well, we all need someone in our
My mother was
like
a supporter.
You have a few other supporters, and you've also been very plain spoken.
Mm-hmm.
So I'm gonna talk to you about what you're talking about here at Advertising Week. You're talking about the new era of marketing and what's ahead. So my first question, of course, what is it? What's the new era of marketing?
Our interpretation of it at S4 Capital, which we started a little over a year ago. There are four core principles. First, we're purely digital, so we're focused on the growth part of the market. If the market is $500 billion, about half of that is in traditional, and about little under half is in digital. Digital's growing at 20%. So we believe on pushing on an open door. We believe we're, averagely intelligent, and that we'll do better in a marketplace that's growing than in one that is static or falling. And traditional media is under pressure. Digital media continues to grow at around 20%. As I said, the overall of that 500 billion is growing at about 4%, according to the experts. If that is the case, and approximately half of it's growing at 20, the Lord knows what's happening to the traditional piece, which people don't really focus on. So the first thing is we're focused on digital because that's where the growth is. The second core principle is that we call, maybe inadvisedly, the Holy Trinity model, which is a first-party data model driving or fueling the development of digital advertising content and programmatic media planning and buying. So we look at the world now, the model now, as a loop, a continuous loop, not tentpole campaigns. Big ideas are still critically important, but they're developed and refined using data. We believe that data improves creativity, doesn't tarnish it or hinder it. We think it improves the effectiveness of creativity, and that then is distributed by programmatic media planning and buying. And the data that you get from that enables you to refine the content yet again. It's a circular process. So it's rather like I think the nearest analogy is to an election campaign, which is always on, and which is this is an election campaign without an election date. It goes on continuously. So that's the second principle. The third principle, or the third is a principle around a tagline of faster, better, cheaper. Faster means more agile, where I think the holding companies suffer is they're cumbersome and they lumber. They're sort of Goliaths, they're dinosaurs, and our model is a disruptive model. It's become quite clear after a year or so. And we believe we should be more agile. We feel we should be better in the sense that we should understand the technologies and the platforms. So there are probably 10 companies that are critically important to understand. The fearsome five, as we call them: Google, Facebook, Amazon, Tencent, Alibaba, Apple and Microsoft. I call them the Seven Sisters to that level. And then 10 companies including Adobe, Oracle and Salesforce. And then you might include IBM and SAP, and you might include Baidu and ByteDance. Obviously there will be new entrants, not many, but to that group of 14. But it's understanding the technologies behind all those 14 or so companies. And then finally, we believe we should have a unitary structure. It's not that earn-outs are a bad way of buying companies, but all the companies that we've brought into S4 Capital so far over the last year, which sort of total about 6, the basic structure of what we've done is half shares, half cash. And we've done that because we're not really interested in people who want to sell their businesses out. The first question or the first topic of discussion when we look at a company is whether the principals want to buy in or sell into our vision or concept. If they don't, if they want to sell their business, there are better people for them to sell to. So, for example, I was looking at Peter Kim and his colleagues, the decision they made in relation to Mighty Hive, and I think they had 15 proposals. We were actually the 5th most lucrative, if you like. So we're looking for people like Pete and Chris Martin, his partner, like Victor Knapp and Wes Tahar at MediaMonks, who want to buy in to the idea that I just laid out. So in summary, it's a long description: purely digital, the holy trinity of first-party data driving content and programmatic, faster, better, cheaper, and a unitary structure.
So if I can touch on a couple of those.
Sure.
You mentioned MediaMonks, and that's a production company. It seems to have strong capabilities.
No, it's not. It's more than a production company. I think it's a little bit unfair to call it a production company. That sort of buttonholes it or pigeonholes it in a subsection on the content side. The fact of the matter is, it reminds me a little bit about the industry's attitude to so-called below the line when I started WPP in 1985, and indeed the attitude of the creative side of the agency to media in the 90s, when the media independents were starting to arise, like Western International, the Grow Brothers, Chris Ingram with CIA. I mean, the industry tended to look down its nose at the below-the-line companies. They tended to look down their nose at the media side of the equation. And in many respects, media has become either as important as the message or maybe even more important than the message currently. But what's happening when you refer to it as a production company, it's more than a production company. This is an alternative way of producing content in a 24/7 always-on world, and it's very different. It doesn't mean there won't be tentpole campaigns. There will be, but it means there will be fewer of them, and they will be further between. There'll always be the Olympics campaigns, the World Cup campaigns, the World Cup rugby campaigns, the Oscars campaigns, etc. But fixed tentpole campaigns in an always-on environment simply don't work. They're simply you run out of room the moment that you air them. So really continual refinement in a 24/7 world where the horizon is changing all the time, or where the marketplace is changing all the time, mean that you have to adjust all the time. And having a fixed sort of idea or having a fixed format just doesn't work. It's continuous refinement and continuous updating.
And is that where dynamic creative versioning comes in? And
it's personalization at scale. So for Netflix, MediaMonks will produce, in the case of Narcos 3, 1.5 million, literally, various permutations. You may not use more than 50 or 60,000 of them.
Wow.
But you produce personalization at scale, and given the nature of the medium that we're the new media that we're operating with, personalization at scale, it works.
And of those 6 companies you mentioned, is one of them a data company? Because I thought I heard you talking about acquiring a data company.
Well, we've got 3 pillars, if you like. If you take the Holy Trinity model, there are, by definition, 3 areas that we're interested in. So the content pillar is around MediaMonks. The programmatic pillar is around, or digital media planning and buying pillar is around Mighty Hive. We have not acquired or merged with a first-party data asset as yet. Now, what we use clients' first-party data. So in the case of Netflix, we're using their data. We're using signals from Google, Facebook, Amazon, Tencent, Alibaba, et al., and we'll continue to do so. I'd like to lay my hands on first-party data assets. They tend to be few and far between, or maybe not so few and far between. There are a few of them, but they tend to be expensive. They often tend to be companies which are in early stages of development. We're not a VC company. We get lots of approaches. We get a lot of inbound, a lot of which is not to our liking. And a lot of these first-party data companies are in such early stages that they might be generating revenue, and they might be generating considerable revenue growth, but they're not really very profitable. And a lot of the people we talk to say, don't worry, well, the EBITDA or EBIT or profitability will flow in due course. But being a listed company, there are 3 characteristics we're really basically looking for. The first is very strong growth on the top line, which is the primary focus. Secondary, not forgetting margin. I mean, we are interested in profitable companies, not unprofitable. We'd rather pay more, or consideration be more for a company that is successful, both top and bottom line, than one that isn't. We don't want to buy problems. And then the final sort of qualification, and this is important in relation to first-party data companies, we don't want any first-party data companies that have a technological base to them that is repeatable, or that it can be copied or disintermediated. So those 3 characteristics are important. So we talk to the platforms, we talk to the software companies about what they see in the marketplace, and the 6 things that we've done, with the exception of Caramel Pictures, which was an assets purchase, have been people who wanted to buy into our thinking and buy into what we wanted to do. And we've done these sort of not unusual. I mean, people, I guess, have done it before. I don't think there's any company I can think of that has gone as far to. We're not going to buy bits of things. Mm-hmm. We're not going to take interest in things. We're not interested in Series B or C or D rounds. We're interested in putting together a company, a unitary company, as the 4th principle talks about, which can build a unified company. And the problem with the 6 holding companies is they're very fragmented still, and they're very vertical. I know horizontality is a word that's been banned at WPP, but that's probably, I think, the worst thing they've done so far, which is because that's what it's about. And they're trying to create one WPP, they're trying to create one Publicis, they're trying to create, I see now, Dentsu talked about one Dentsu. IPG is one company, basically, because 75% of it is the McCann Group. And then Havas, of course, is inside of Vivendi now, so that's created more of a unified company. I guess the only company that's more fragmented of the 6 is probably Omnicom, which hasn't made major structural changes yet, but ironically, or maybe paradoxically, has had the best share performance of the 6.
So given that, and that plain spoken opinion, as we promised, what is more important, a good business strategy or a good creative strategy?
Well, I don't think the two are different. I mean, I do think we had a bunch of search consultants in London yesterday, and we did a presentation. And they're visiting traditional agencies, new agencies in London for the next 3 or 4 days. And a sort of question was asked, and I find it a sort of snotty question by the industry, actually. There's this sort of arrogant attitude in the industry that creativity resides it's the same thing as the below the line attitude, or the attitude to below the line, below the salt is what we used to call it in 1985. There are creative people inside media companies. There are creative people inside data analytics companies. There are creative people inside PR companies. There are creative people in finance departments. Sometimes they're too creative. I see the SEC. The SEC has come to a form of agreement with the ex-CEO of Comscore. So now we know a little bit about what was going on inside Comscore. So sometimes people can be a little too creative. However, it's a very narrow interpretation of it. And behind your question is sort of that implication that creativity is narrowly defined. It's not Don Draper. Don Draper is yesteryear. That's the 19th and 20th century. We're talking about the 21st and 22nd. And the definition of creativity is far different. There are nerds who can be creative. It's not just that there are creative people who are creative and nerds aren't. And by the way, there can be creative people who are technologically proficient. It's not just nerds who are technologically proficient.
Well, I'm afraid...
I do. If I sound somewhat irritated by the question, I am, because, again, I think it's just it's an old-fashioned interpretation. You sound like those... You're not you, but the question sounds like those creative directors or the creative heads of agencies who look back with rose-tinted spectacles to a bygone era. That era is finished. It's gone. It's changing. It was changed, and it's a new era where the definition of creativity is much broader, and the tools that we use to develop ideas and implement them and make them better are technology, or the ideas underpinning are technological, or data-driven. And because something is mathematical or technical or scientific, it doesn't mean that it destroys the creative idea. I think it improves it.
Well, it certainly doesn't have to be exclusionary, and there's arguments about which should come first, the data or the creative, and I've talked about that in other versions of the podcast. But one thing that I do have to say, I came up from the creative and marketing side, so
you're biased.
No, not really, because now I work with Jack Myers and I know the value of research and data. But the point is
but you see it as a subsidiary. It should have a voice at the table. It should have. It should be a significant part of the inputs. One should not be dominant of the other. I mean, it's funny. We were talking about. A journalist asked me yesterday about who should become country manager. Actually, it was a WPP country, a WPP country, or led country, and he said there was a lot of chat about it should be a creative person, and I said, well, in that country, Group M is dominant, which Group M is dominant in many countries in the WPP structure, and that therefore it should not be somebody from the creative side of it. It should be somebody from the media side, because I couldn't believe that the media people would take instructions from the creative head in that particular country, given the stature of creative in that country. So getting the balance right, the balances have changed, and it's not, again, it's not Mad Men anymore, it's changed.
Yes. Well, there's a lot of things that we have to parallel path and balance too. I mean, there's transactional and relationships and...
Yeah, but if you look at the nature of the people at S4 Capital, which might be, the right model might not be, but there's about 1,550 of them. And on the Mighty Hive side, on the media side, most of them, if not all of them, have not come from agencies. The average age is 25. And the principals came from Yahoo and Google.
Peter Kim.
Chris Martin came from Yahoo, and Lexi came from Salesforce. So these are tech guys. They're not... Now, I would say they're all very creative.
Sure.
That might be anathema, and that might be... I might be describing the Antichrist to many people listening to this podcast, but, I'm afraid... people have to wake up to the fact that the definition is a much broader one.
I think you have to be creative to have the kind of vision that it takes to build the trifecta.
Good, we're making progress.
Yeah. All right, maybe you'll convert me in the next 10 minutes. So you expect S4 Capital to double, I think, in the coming year.
We've set the target of doubling, and in the first 6 months of the year, we're up on a like-for-like basis, excluding the impact of currency and deals, which have been positive, have enhanced the growth rate to about 45%. We're up over 40%, and July we were up on a like-for-like basis by over 50%, almost 60% on a reported basis. So the top line growth, that is 2 to 3 times the growth of the digital marketplace, which I said was growing at 20%. So we're very pleased with that. We're very small. I mean, this year will be about the market's expecting about $250 million of revenue and about 45 million of EBITDA before holding company costs of about 6, so net about 40 million EBITDA. So that's small in relation to the holding companies, but as my mother said, good things come in little packages. So this is small but growing quickly, and we expect, so we're outperforming that. We'll double in 3 years organically, excluding deals. We're not talking about deals. And that will enhance the growth rate. So we think we have a good shot. We have to revise the 3-year plan shortly and then do our budgets for next year. But I would hope we'll go into next year with budgets at least where we were for this year, which were up about a third, and outperform the budgets again.
Well, speaking of expanding and a global footprint of talent,
right.
Certainly you built one of the biggest ever.
Well, I have to say that, with Sarches, as I was never the third brother, but I was one of the people who could claim to be. There are about 25 people who could claim to be the third brother. And Tim Bell, who sadly died recently, I probably had the biggest claim to that title. But we did it there as well. So we did it twice, or I was involved tangentially with Sarches, and probably a little bit less tangentially with WPP. So, maybe it will be third time, but who knows?
Well, one of the early things you did was you expanded into Asia Pacific.
Yes.
And since you have the
presence... So Asia Pacific for us now, S4 is only about 10% of our business. It's actually going up by about 150%, but it should do at that sort of tiny level. So, but it is growing very rapidly. I was in Singapore over the weekend, and, the opportunities are huge, particularly, we're into Tokyo and to Japan, we're into Shanghai and China, we're into Singapore, we're into Bangalore in India, we're into Sydney and Melbourne and Australia and Auckland and New Zealand. So we have a good positioning there already, but we need to build scale. We have to figure out what our model is going to be in China and India, and I think the model will be a transparent one. I think that's where the existing agencies are vulnerable. Corruption in China, particularly in the media business, and lack of transparency are two big issues. So I think, and SASAC, the government holding company, which last time I checked had about $2 or $3 trillion of sales, if you combined all the companies, have a performance index for their chairman and CEOs, which includes getting rid of corruption. And President Xi has been very focused on the corruption issue in the Chinese economy. So I think there's an opening there. And India it's not that corruption is as great an issue, but it's really around transparency in India. And of course, we built a business at WPP which has 50% of the market in India, and nobody has come close to WPP in India for the last 20, 25, 30 years, certainly as long as I was trying to run WPP. So we have some views on how we enter Indian market, and I think, and Chinese market, and I think that those are the two principal ones. Then you have, of course, markets like Indonesia and Vietnam and the Philippines, etc. But that's a very big opportunity for us.
Another question motivated by my boss Jack Myers is how do you compete to attract talent and retain them in today's economy?
I think because we're a startup, because we're a disruptive startup, that in and of itself is very appealing. There are a lot of young people, and the average age, as I said, of Mighty Hive is 25. The average age of Media Monks is 33. There are a lot of people that find, the sort of mission of disruption. I mean, Glenn Hutchins, who founded Silver Lake, one of the founding partners of Silver Lake, if not I think he was the original partner, divides companies into disruptors and disrupted. I call them legacy companies, analog companies, and digital companies or technological companies. And there's a lot of attraction to companies that are trying to disrupt the status quo. I think young people take that in and of itself as being, a mission or a purpose. And so I think we offer clients a totally transparent model, which, the hangover of the ANA inquiry, the K2 inquiry, rightly or wrongly, the perception was that there was a lack of trust in the industry, from clients to agencies, and that, rightly or wrongly, and I would side on wrongly, that perception that wasn't reality, but it became a perception, and that's still a hangover. And what we're seeing now, I mean, the first sort of what we call the tsunamis of pitches, there were sort of two waves of them. I think we're sort of going through, maybe it's a mini tsunami at the moment. Certainly we've noticed at least sort of 5 or 6 major global pitches at the moment. So there does seem to be a wave of pitches, but they're different this time round. They're much more considered. It's not throwing mud at the wall and seeing what sticks, from a cost point of view.
Yes.
These are pitches which are much more refined and thoughtful, and in terms of the digital elements, we're getting cracks at many of them, which means we can participate in many of them on the basis of selecting the digital piece. I mean, we're not involved in traditional, neither do we wish to be involved in traditional at all. We were talking to a tech company today who said, wouldn't you be interested in our traditional? And they spend quite significantly traditional, and the answer is no. I mean, my view on that you should short the agency that wins the big major traditional pitches, because they are asked to make commitments on inflation and media pricing, which they can't possibly meet. There's one review I can think of where the incumbent agency, in order to avoid a review, made a promise on inflation and media pricing, which the client's procurement department immediately felt was just completely unachievable, and it was sort of a desperate attempt to keep the business, and nixed it. So I mean, although that agency is in the review because it's partly the incumbent, I think their chances of winning have been diminished by the fact that they made too many promises. And we saw that, when I was at WPP, we saw agencies that competed against Group M would make what we thought were irrational promises on pricing and inflation, which they couldn't possibly achieve. We on average had 25, 30, 40% of the market, or what in some cases 50 in the case of India, and we knew what the pricing was, and didn't make any sense. So I think I'm not interested in the traditional business. I think it's a sort of zero-sum game at the moment, and the fact that WPP in its reporting now rolls up 73% of its business post-Kantar in one profit center, which is called advertising and media, makes no sense at all, other than you're trying to hide and cloak the deceleration, the negative growth, the fall in traditional creative. When you put Wonderman and JWT together, or you put VML and Y&R together, there is going to be a lot of fallout on the JWT side and the Y&R side, particularly when you put those people in charge, because when you put VML and Wonderman in charge, because the traditional agency people feel as though they're second-class citizens, and a lot of them are on their bike.
Well, I have nothing. but
That's it, we're finished?
no, we're not. I have
Okay,
one
fine.
really good question for you. Since you invoked your mother
Yeah.
twice,
Yes.
I'm bringing her up a third time.
Right.
I'm telling you that she would probably be very proud of you.
Well, she was impossible. She would go to the Jewish Care, which is the day center, and just talk about her only son, which was part of the problem because I was the last chance saloon, and also her grandchildren. So they just drive everybody mad. So my dad was probably more influential than my mum in many respects, but my mum was I'm sure for other people a complete pain.
Well, for the last
proud
in the
Jewish
litter,
Jewish grandmothers are a pretty appalling breed.
I know from that. But from the last in the litter, you did pretty well. I mean, you really
Well, right.
accomplished everything.
Yes.
You're like Cher. You've got practically the one name appellation. Everybody knows you. So
I wouldn't say everybody
wouldn't your
does, but-
mother say, "Take a rest"? Why?
No, she wouldn't actually. No, she wouldn't. One thing she wouldn't say would be take a rest. Her philosophy, I think, just like my dad's, would be keep going.
Excellent.
So no, I don't think they would actually.
Well, I think
I mean, the Sarches had a couple of phrases. Nothing is impossible was one, which I agree with, and the other one was never give up.
Oh.
The other phrase that it is not enough to succeed, others must fail, was a very interesting quote.
Well, I for one, am happy you're still going and you gave me as much time as you did.
Good.
And I think that we're probably the better for your challenges.
Okay,
So,
good.
thank you so much.
Very good.
Sir
Thanks
Martin
very much.
Sorrell.
Enjoyed the opportunity. Thank you.
Thanks for listening to Insider Insights from MediaVillage. I'm E.B. Moss. Rate, review, subscribe on Apple or wherever you listen to podcasts. And for a longer transcript of this show and more insights and thought leadership on media marketing and advertising, go to MediaVillage.com.